What's next for the commodity rally? Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Doomberg, author of the Doomberg newsletter on Substack and online. Hey, Doomberg, it's great to have you on.
Maggie, great to see you. We're joking before you hit live that not much to talk about, so I guess we'll have to make do. We'll have some
Yeah,
small talk.
nothing to talk about. In fact, we booked this a while out, and as I was thinking about you coming on today, so many of the areas that you cover, energy, metals, geopolitics, it feels like there's a big shakeup going on in almost all of them. So, I mean, we could start anywhere, but I think we have to start with metals, which is probably what a lot of folks are wondering about today who are watching. We had another silver, another massive rally in silver. Gold surged past $5,100 an ounce. I mean, what do you think's going on here?
You know, it's a scary time in a way because I've joked in the past. $2,500 an ounce ago, that the one asset that I own that I'm not thrilled when it goes up too quickly is gold, because I own more things not denominated in ounces than I do have gold. And usually when gold goes parabolic, that's a bad sign for the underlying currency in which you're quoting that price. And it is bizarre to see the price of gold galloping $100 to $200 an ounce at a time against what is ostensibly the world's global reserve currency. That's unsettling. And one wonders what's going on behind the scenes. Full disclosure, I own a fair bit of gold, but I couldn't help but take some of it off today. Historically, when I do that, I end up buying back on a dip. And so I just owned an irresponsible amount, and it became irresponsible because of appreciation, not out of greed.
Yeah.
And so, I'm in Tony Greer's Slack room, and we'll talk about Tony's upcoming conference, I'm sure. And everyone's like, wow, like, as they say, high five with one hand and make a sale with the other. So I took a bit off today, but I still own a lot. I've never owned silver. I've watched it. I don't view silver as a monetary metal. I think it is predominantly an industrial metal that has gone full meme. And I'm very fascinated by the meme phenomenon. This feels like it's got very strong AMC vibes, GME vibes, which is fine. I mean, I have two of my friends who've long held silver, and our mutual friend JJ, of course, is undoubtedly one of them. I'm happy for them. I'd like to see my friends make money. We have a lot of Bitcoin subscribers, and if Bitcoin were to go to 1 million, I wouldn't be upset I'm not in it. I'd be happy for my friends that own it. It's hard for some of them to understand that. But gold, back to gold, there's something significant going on in global geopolitics. When we read history, one thing is always true. What's actually going on is not appearing in the contemporary media coverage of the daily events. It does have a feel of major phase shift to it. I'm just thinking of the headlines since January. For us, trying to stay ahead of it, given the topics we read about, is the snatching of Maduro. I mean, the attempted assassination of Vladimir Putin, which is what the Russians are calling it. This weird set of headlines out of China over the weekend.
The generals.
This Wall Street Journal story about a general leaking nuclear secrets to the U.S. I'm very dubious of that story. The Wall Street Journal, reasonably good paper. I subscribe to it, but occasionally there's a story in there that just makes you laugh. And one wonders whether this isn't one. I'm reminded of the accounting of the blowing up of Nord Stream, where the cast of Gilligan's Island was deemed responsible, and that first appeared in the Wall Street Journal. This story about the generals leaking nuclear secrets feels wrong. Who knows? Much of the legacy media comes down to sources said. So the headline is what the sources are alleged to have said, but the story itself is that the source said it. We wouldn't publish something that we knew wasn't true just because somebody said it. But happens a lot in the legacy media, as you know, according to people familiar with the matter.
Yeah. I will interject here.
Sure.
And it's been a while, but I used to work in traditional media. And when I was there, now this was a while ago, But when I was there, that source had to be incredibly credible for you to be able to run with it as an unsourced name. Now, the problem with the distrust that's formed in the behavior of the media, and I'm not defending any of them because I didn't go, I chose not to return to it, is that we no longer trust that that's the case. But that used to be the case, that if you did that, you had to, and it got kicked all the way up to the lawyers and the networks because you, of course,
but I would say not everyone was held to that standard. There's a few odd ducks masquerading as reporters in these big media outlets. I'm sure most people who work.
I would think the Wall Street Journal would fall under those legal obligations now. But now this is the problem of where we're at, right?
Is Xi Jinping going to sue the Wall Street Journal? I don't know. But let's take a step back. You know, I know we're kind of just going all over the place, but
that's okay.
About every 6 months on Twitter, we see this hype cycle of either Xi Jinping's had a stroke or Xi Jinping is the victim of an ongoing coup. And they're all BS, historically. And they'll all be BS until they're not. And so we were, again, you know, going back and forth in the Slack, like, I said, if this was a real coup attempt, then I would expect to see gold at 7,000 soon, right? Like we're talking about, and if that Wall Street Journal is correct, that it was, you know, CIA linked, coming on the heels of the drone attack on Putin's personal residence, if Trump, and I'm not saying he did, okayed the CIA-backed coup attempt on Xi Jinping, coming on the heels of this drone attack on Putin, where there's some doubt as to whether Trump was in the know or not. The Russians clearly have an idea as to whether he was in the know or not, and the Chinese would have an idea, again, if this coup storyline is true, whether Trump was in the know or not. And the answers to those questions, which are not being, you know, they're not gracing the pages of the legacy media's mastheads, will dictate the potential volatility ahead. That's what I've been thinking about today.
Okay, so that's super interesting. I will say it's pretty conspiratorial, and again, I'm not defending the traditional media, but I think this is. Do you think that gold is trading on this kind of stuff?
Well, what happens in massive uncertainty, right? You have flight to quality. Typically, that's been 10-year Treasuries historically during major crises. And what we're seeing now, again, let me be very clear. I don't believe those things are happening. And I started off my answer by saying that I thought that Wall Street Journal story was largely bunk. But it's in the Wall Street Journal, and it says this person is basically connected to the CIA. So it's not a big leap for me to say, well, if that is true, then, you know, this coup attempt could have been part of a American-backed plan. And to be fair, there's no shortage of countries in which similar things have occurred. And so, again, you know, because look what happened in Iran, that decapitation strike during negotiations, right? The Russians are claiming that there was an assassination attempt on Putin that hasn't gotten nearly as much press in the West as it has in Russia. And so, again, to see this, you know, set of headlines break over the weekend, your pattern recognition kind of kicks in a little bit too. But again, I don't believe it to be true. But if that Wall Street Journal story is true, that, you know, and then the other reports we're seeing about, you know, shootings and who knows? I mean, Lord knows it's hard enough to get an idea of what's going on in China as a Western analyst as it is.
Yeah.
Certainly not during periods like this.
Yeah, and I think that one thing that you're bringing up is that there is this sense that anything that you understood to be true may be in flux now on a geopolitical front. I mean, if that's not the understatement of the century, but but you know, this idea, including Mark Carney's speech, that, you know, like this, we've sort of entered into a new phase. Do you? Which would you would understand that there would be a desire for a flight to safe havens if that was the case, as everyone's trying to figure all of these sort of confusing threads out. Do you sense that there's, but you, it's interesting that you called silver a meme stock, is behaving like a meme stock. So what part of the metal trade do you think seems like safe haven, and what part do you think seems speculative? And because, that's the worry. I think that it's a crowded trade and that,
Sure.
all of a sudden you're going to have something happen and this thing comes down and rips everybody's face off, especially if you have people playing it who are not traditionally commodity traders.
So I don't want any angry letters
No angry letters.
as a result of what I'm about to say. Gold is a market that is much, much, much bigger in value than silver. Gold is a central bank reserve asset, a significant one, a role that silver cannot play for a variety of reasons. And silver used to be the minor monetary metal. And the bull case for silver now is AI demand, solar demand. Is not enough silver, circuits need them, blah, blah, blah. There's nothing, I don't say blah, blah, blah to diminish that story. It might all be true, but that is a different bet than, never mind flight to safe haven, switch in safe haven. So if the 10-year is no longer neutral, remember, you need a neutral reserve asset for the settlement of imbalances in international trade. I say that like a robot because I read it in Luke Roman's Forest for the Trees, Tree Rings every Friday. Love Luke. Hi, Luke, if you're listening. Silver can't play that role. And if treasuries are no longer neutral, gold is nobody's credit. And so the value of central bank reserve assets that have been allocated to gold is catching up to T-bills or treasury bonds pretty quickly. And then I'll leave you with this analysis that we put in an old piece, whose name I forget. The value uplift of Russia's gold assets has offset the seizure of the Western debt. The step up is more than 200 billion. And I don't think that's a coincidence. And so, suddenly, slowly then all at once, things, the whole Greenland affair and Carney's speech and the Davos circus, which was, like, this is the US president we're talking about. This is the global reserve currency and the still substantial, reserve asset, i.e. treasuries. When people get spooked at the sort of core foundational axioms of finance, and you kind of enter into uncharted waters. And so I don't know what to make of it, but it is. Look, I mean, we can all see the numbers. The fiscal situation in the U.S. is unsustainable on the current path. We, in our worst piece of 2025, wrote a piece called "The U.S. is Not Broke." Wish we hadn't written it. I still believe it's technically true, but Doge taught us one thing, which is, as Lynn Alders, who correctly called it, said, this train ain't stopping. And you can't even find, I saw a post on Twitter, it might have been Twitter or Blue Sky or wherever or maybe even on Notes, who knows, that you can't even find the Doge blip in government spending. And so everybody can do that math, entitlements, growth is not going to climb out of that hole. And so we all see it, and it's sort of like a weird Ben Hunt common knowledge moment where everyone knows and now everyone else knows, and everyone's like rushing to the exits. Gold is parabolic right now. Again, I sold some, shame on me. I can't help but sell into parabolic moves. Again, Tony's voice ringing in the back of my head. If you're not going to sell into strength, when will you sell? Do me. So I don't know. It is just so chaotic, and that Carney speech, which I thought was very interesting, kind of rich, to be honest with you, but coming from Carney of all people. But it's just where we are seeing. And by the way, it's January 26th.
That's why we're all exhausted.
I mean, it's been a great year.
Yeah, I think that the speed of the speed of the moves, the speed of the developments and the unraveling, and I've talked to people, and some of the people, and you mentioned Luke, I talked to him, he's going to be on with us in February. They've been talking about this for so long, and you ask them, like, and there's this sense of disbelief. And as I wrote in a piece I put out, like no victory lap either. It's just like, oh God, it's actually happening. Like these concerns that we've had for so long,
Yeah.
like it feels like things are starting to, to move now exponentially. And it has people more worried than feeling right or
Well,
righteous. So
here's the analogy. So I own gold as a hedge, as an insurance policy. I dutifully pay my home insurance premiums, every year. And when the calendar flips from 2025 to 2026 and my house hasn't burned down, I don't begrudge the premiums I paid. And by the way, if my house were to burn down, I don't joyfully say, wow, at least I overinsured it.
mhm.
And I view my gold ownership as kind of insurance that I was hoping to never have to file a claim against. But here we are, right? And so, gold's up $700 in January. Like,
Yeah. It's mind-boggling. By the way, we jumped right in. Hi, everybody on Substack and YouTube are watching us live. If you have any questions, put them in and we'll try to address them. Want to ask about, and someone said, looking forward to seeing the Green Chicken and Maggie in Nashville. We're looking forward to seeing you too. I'm excited. If you want to join us and you haven't yet, we'll drop a link to Tony's site so you can grab some tickets. But I love the timing, Doomberg, because these are all of the things that I'm looking forward to hearing you and Grant Williams and Brent Johnson talk about. Again, two guys who've also been like sort of looking for some of these developments. Now that's happening, I'm really curious to hear how they feel. And JJ, who, gosh, if anybody knows about metals, it's him.
Yeah, if somebody wants to learn about silver, they should read JJ, although he had a great piece about, on gold over the weekend too. Yeah, JJ's been great. We've both become friends with him. He's a great addition to Substack. Substack's really reaching escape velocity, by the way. It's fantastic.
Yeah. And by the way, in terms of credibility, because a lot of the people show their work, which is, I think, one of the things that was lacking, and you have the time and space to really put out your narrative, which I appreciate. And I said that recently. So let's make our way. Silver's up 200%. Yes, I think so. Let's talk about nat gas, talking about something else that sort of, has had this massive rally. It up another, was it another 20 something percent today? I think 23%.
Yeah, you have to be careful.
Okay, well, fill us in, because that was the headline. And then talk. Is it just because of this winter storm? Is there something else going on? Because I know you've looked at it as the bridge fuel for a long time, but it's been the widowmaker in terms of price action.
Yeah.
Itself.
So we're in that weird couple of days where the February contract is rolling off and the March contract is now front month. And so people are still looking at the old February contract. So the February contract stops trading on Wednesday. Most people have rolled out of it. And somebody obviously was caught. And I saw over $7 a million BTU printed today. But the March contract, the thing you'll see on Yahoo Finance or on investing.com is at like 380. It's up 6% today.
Okay, good.
So remember when oil went negative, it was that one contract, right? Somebody was stuck with a bunch of oil and they had no place to store it, and they had to pay people to take the contract off their hands. Not that that's what's going on in the February contract for Henry Hub, but I mean, it's a similar kind of feel to it. Typically when the contracts roll like this, they're much closer in price, but because of this storm, so the answer to your question is yes, it has everything to do with the weather. Full disclosure, in my little YOLO account, I have nibbled a little bit on shorting natural gas, nothing too substantial, but I do have a little practice YOLO account with some money in it. And I don't like to talk about something where I have a position without disclosing it. But I do have some puts in UNG just to play, and a few other folks in the TG Slack have gone in on the same trade, because typically speaking, when you see these weather-related spikes, they always kind of regress to the mean. There's an awful lot of natural gas in the world, and in Texas in particular. So,
and this is what, when people talk about the energy needs, and we need energy, presumably this is why nat gas the price has remained subdued, because there's just
so much of it, and it's produced in association with crude oil and natural gas liquids. This is the big change in the hydrocarbon complex that the shale revolution has brought, in addition to just volumes and volumes and volumes of cheap hydrocarbons. So look at 383 per million BTU March Henry Hub. That's still like 22, 23 bucks a barrel oil on an energy equivalent basis. It's still very, very cheap. It just was it was just much cheaper than that a week and a half ago before the weather turned. But I think a lot of the spike that we saw, especially in the sort of as the February contract was rolling off, is this fear. Remember I think it was Winter Storm Uri or whatever it was a few years ago, froze out all the production, and you had all of this, the power lines and going down in Texas, and that brought up a bunch of natural gas. That Texas has done, and the industry has done an enormous amount to winterize all of this, and I do think that there was sort of a, gee, if this goes to 100 risk embedded in, but I never really thought that was going to happen, and so we'll see. I'd say if you think there's going to be a spring this year, natural gas is a little rich right now, and we'll know if there'll be a spring here in a couple of weeks. I was looking at the forecast yesterday. I guess I could easily pull it up now, but like, what's the forecast in Houston, Texas? I think it's in the 60s on Thursday. So like, this is not Armageddon here.
Yeah, where I'm sitting, that's not happening for sure, and probably not for you either. But
I see a high of 64 on Thursday in Houston. I guess I should get on a plane and go to Houston because I'm freezing where I am. Yeah.
Exactly. What we have a question. What do you think oil and energy is going to do this year? Higher prices for oil or sideways? And another asking about Iran, the situation with Iran.
There's an awful lot of oil in the world. I've been debating this cheap oil crowd for a long time now, and oil's at $60. 2 years ago, it was what, 75? Gold was less than half of what it is now, and it's at 5,000. Like, I've told people, if you feel the need to own something, just own gold. There's just an enormous amount of oil. Oil has never been cheaper in history, other than that freak trading data that I referenced earlier, post-COVID. As measured in ounces of gold. In fact, an ounce of silver buys you a barrel and a half of oil with some change. It's crazy. Like, it's just dirt cheap. The long-term real price of oil is lower. In real terms, it's always lower. It just is. Just plot the Bloomberg inflation-adjusted price of oil, or plot the price of oil in ounces of gold over 50 years, and show me on the chart we're running out of this stuff. We're just not. We're putting a doom zoom together on copper. Similar story. Our February doom zoom, is on copper. Super cycle or mostly hype. That's the subtitle, and that's the working subtitle. And it's kind of a similar story. Like, there's a lot of copper in the world, and we go through the bull case, and I've seen these things floating around that we're going to need 10,000 years worth of copper in the next 18 years. I have an explanation as to why that's a little bit of a hyperbolic phrase, but you'll have to be a Doomberg Pro subscriber to hear it.
Pam asking, are midstream companies not a good bet then? Yeah.
Oh, I think midstream are great. Midstream are volume plays. They tend to be really well-run companies. Don't own any of them, just to be, again, transparent, but they seem to be well-priced, pay big dividends, shareholder-friendly, shunned by the big money. So our philosophy is any service provider or other companies that are leveraged to the volume of energy produced and consumed is fine. And if you're an E&P play leveraged to price, that's a different story.
Let's talk about Europe, because you have a piece out, and it sounds like you're pretty bearish Europe. And we have this sort of sell US, rest of the world rally narrative floating around, and last year, a lot of people talking about the fact that some European indices did outperform, and they look like, okay, there's problems, but they're cheap. That's what you hear.
Yeah. So I want to be clear. Bearish implies a forward-looking analysis. We chronicled the is state as very bad.
I like that, the is state.
Whether that's near the bottom or not remains to be seen. Could be. I'm sympathetic to people who take their cues from people like us when we write about how bad a certain situation is, that might be a contraindicator. We certainly have to be closer to the bottom than the top. One would hope for our European friends that is the case. We wrote this piece called Borrowed Time. The entire sorry class of European leaders needs to be wiped away. Starmer, Macron, Merz, von der Leyen, Kaja Kallas, who was the focus of this piece. Look, we sit in the piece. Europe is at war with everybody. So find a major power in the world that's not annoyed with Europe right now. Obviously, Russia, for perhaps understandable reasons, they were not talking to each other. Chinese aren't very happy with Europeans. Indians, perhaps they'll get this deal done, maybe they won't. And then Trump's over there beating them like drums on this whole Greenland issue, insulting, the NATO service members' contributions to the Afghan war, which I saw that he walked back, thankfully, and things like that. But like nobody would say last week was a glorious one for European prestige. Find me a part of the world that's thrilled to be, associated with Europe right now. And I feel bad for our European friends. They're just led by clowns. Like Brussels is just one giant useless bureaucracy that sort of acts like a vampire.
Doomberg, some might say the same about us in the U.S.
Yeah,
Hey, I'll quote Tommy Thornton, which I haven't. I'm waiting. It's been 5 years I've been rolling out this quote, but it hasn't changed yet. We're in a bear market for political leadership everywhere.
Sure. Yeah. A whole different ball of wax. What's going on in Minnesota? But yeah.
Yeah. What? So, there is. So I like the is state. I have heard people make the argument that in a multipolar world, Europe doesn't disappear, but is greatly sort of, that maybe the EU doesn't make it. Maybe they sort of unwind, and there are some people who are much more bearish about the prospects, but you think it's the politics as opposed to sort of the economics of Europe.
If this leadership class does not get wiped away, then you're bringing in the dissolution risk for sure. I just have a feeling that calmer heads will prevail, and competency, will eject incompetency. Who knows? Maybe I'm naive. I did think that Doge would work, so you got to take that with a grain of salt. I do think that the risk of the European Union going away is very high, higher than it's ever been, higher than it was during the debt crisis for sure. But I can just put in numbers. So they're energy vassals, and they consume 38 exajoules of hydrocarbons, and they only produce 5. It's hard to have heavy industry. It's hard to have a military-industrial complex. It's sure some of the German military-industrial complex stocks are rallying, and great. And I hope everybody listening who bought them made money. But geopolitically, like, what do you think war is? It's the delivery of concentrated forms of energy in small spaces. Make things go boom. You need energy to make bombs. You need energy to make steel, to make tanks, to make armor, to make planes. The U.S. is desperately trying to reconstitute its industrial might in order to better fight China, which has taken over all of it, which we've been writing about and I've talked to you about many times.
Yes, you have been sounding the alarm on that. How do you think that effort's going?
Well,
are you encouraged by what you see? Is it
mostly.
A little too late?
No, although it's never too late. I would encourage Europe to get started drilling too. But the U.S. does have a huge advantage over Europe, is that it's a global energy gigapower. And that's a huge foundation of strength from which to build. And it has dozens of allies it could browbeat into doing what the U.S. needs to get done. So I think Greenland was all about this, right? The Western Hemisphere, which again, we've been chronicling and predicting for some time, the Venezuela episode, wherever you want to describe it. There's plenty in the Western Hemisphere for the U.S. over time to wean itself off of its dependencies, and Luke will tell you that's impossible, and Japan has tried, and I would say the U.S. is not Japan.
Yeah.
But obviously, Luke and I have lots of friendly debates.
Patrick asking, what if Europe cuts back on U.S. nat gas? Is this a point of leverage?
And replace it with what? They've cut off supplies from Russia, and they've alienated Qatar. We have this in this forward time piece. Like, Qatar is another country. They have this CSDDD, whatever it stands for, some climate reporting thing that is making it impossible for LNG suppliers to provide gas to Europe. Chris Wright and his Qatari counterpart wrote an incredibly sternly worded letter to the European Commission pointing out this fact. I saw a stat where 60% of Europe's LNG comes from the US today. That's not a point of leverage for Europe. It's a huge point of weakness. Look, if Trump, let's say the Greenland thing escalated, Trump said, all right, we're going to cut off LNG supplies to Europe until they come on board. What would have happened? Natural gas prices in the US would collapse. First of all, great for US consumers. Like, the molecule matters. We wouldn't be seeing this 385 per million BTU price, which is dirt cheap on a global scale. We'd be seeing negative prices, $1 per million BTU, 50 cents a million BTU. And Europe would go full tilt because they're already dangerously low in natural gas, incredibly cold winter. They're just going to get out of this winter through the skin of their teeth if LNG supplies are uninterrupted. So who has the leverage? I mean, so some LNG exporters lose some money. Okay, Trump, tells the Fed to print some and they give it to them. I mean, obviously it's more complicated than that, but this is not an existential risk to the U.S. This is what people get wrong about Russia. Look, anytime I talk about Russia, I get the angry worded letters. Russia produces twice as much hydrocarbons as it uses. If you stop Russian exports from happening, first of all, you can't. But to the extent that you can, that just makes it cheaper domestically. They have the supply, and the rest of the world has to pay more. And then whatever molecules do find their way out of Russia get sold for a higher price, and they make it up in price. I mean, commodity players make it up in price.
Yeah, it's funny you said that. I just had a conversation with Jed Dorsheimer from William Blair, and he's really operating on the sort of energy is the center of the economic universe.
Yeah.
So when you say that and you say Russia, then when you think about who has leverage based on that, it makes a whole lot of sense. I want to ask you about AI. We've got tech earnings coming out this week. I mean, there have been so many geopolitical headlines, but it's sort of easy to overlook the fact that we're in the middle of earnings season, and this big issue of AI demand and energy demand, and is there enough, and is there a bubble in the data center build out? I know you've looked at that intersection a lot. How are you feeling about that story right now?
Yeah, it's a bubble, and it's also extraordinarily consequential, altering, historic, mind-blowing. We do some private investing in the AI space, and what we see is scary. Change cometh, but it's still a bubble. Yeah. All the hallmarks of a bubble. I've lived through many bubbles, but bubbles leave their mark too. Yeah. And so I can't tell you what tech earnings season is going to be like, but I can tell you that the things I'm seeing, even just in the open source, would blow your mind. No guardrails. It's coming. And like what a startup can do with an astonishingly small amount of money. Like, inference is cheap, and open source models are available for free. So you have a good, enterprising team, things you can build for next to nothing. It's just incredible. The moats of SaaS companies are eroding rapidly. The new cloud release is blowing people's minds. It's who I can't help but feel bad for is this is not a diversion. Sam Bankman-Fried. Boy,
How so?
at least one of the startups that he illegally directed customer deposits to fund was Anthropic. And had the estate not sold it, which was part of the reason why everybody was made whole, and then some, it's the multiples of that estate today. That one bet undid a lot, and he's sitting in jail. And crypto felons are getting pardoned left and right. And again, he was convicted of a felony, a serious felony, sort of Corzine vibes of MF Global Days, which I'm sure you get the reference.
Yep, I do.
And yet, two of the bets that he made were smashingly, like home run career, Chamath with Grok, Grok the chip designer, not the LLM that Elon is running, and they're just a huge home run. And so with the second one, whose name escapes me, the bankruptcy estate sold it back at what they paid for it. Like, they just kept it. That alone would have made just huge home runs embedded in what Sam Bankman-Fried was doing, and the guy's sitting in a clink. Yeah.
Yeah. I mean, for it's sort of, in some way connected to the AI story you're talking about. I mean, right bet, wrong way to do it. And, fraudulent, so ended badly. And AI, it's like you believe in the technology, the change. Is it good or bad? What it unleashes, who knows? But it's a bubble that could burst, and there'll be a lot of pain too. Like all those things can be true at the same time.
Yeah, and there's going to be a lot of companies that are going out of business that don't even know it, and a lot of jobs going to disappear. Yeah, it's really uncharted.
Do you think that the sort of is there an obviously there's a focus on job losses? Do you think the economic benefits, productivity, sort of any positives that can be unlocked are underestimated at this point?
Yeah, so one of our operating mental models is that the human endeavor is infinite compute, sort of a Kurzweilian vision of the world. And we're rapidly approaching the point where what it means to be human is going to be a foundational question. I shudder to think what it means for my children, let alone their children, should they elect to have them, which fewer and fewer young people seem to be doing. So, like, we're talking like fundamental. And I know, like, it's like sounds cheesy, and and believe me, we're not an AI newsletter. I'm not doing this for clicks. I just see it, and I've played with a lot of this stuff, myself for obvious reasons. You either, grab it and try to become better with it, or you get past. And just the stuff I'm seeing is just scary, crazy. Like even now, I question what I said. So here's just something that's happening. I consume a lot of content because I'm in the content business. I consume a lot of YouTube. There's an army of clearly AI-generated content that I suspect is actually made by Google so that they can create content for YouTube and not have to pay the 55% cut to creators. And more and more of what the algorithm is putting in front of me is AI-generated, obviously AI-generated. I've watched a few of them. They're interesting. They don't yet pass the Turing test. Like, I can tell it's AI, as opposed to a human-led project that uses AI. They're two different things. But there's a giant algorithm that is going to take over YouTube, that it will crowd out the creators. But on the flip side, the hopeful side, I do think, we've been saying this for a long time, that the value of authentically and provably human is going to skyrocket. And HumanTube, where only authentic, validated human content creators are allowed to publish their videos, it might be an interesting business model. Substack, I see they launched their Substack TV. I see a lot of AI in Substack that clearly doesn't pass the Turing test. It's soon it'll just be AI talking AI. So when you watch something that is like clearly an AI historical documentary, you have to ask, is it hallucinating? Are the facts real? Has a human checked this?
Yeah, because no one's vetting any of this. Like there's no, which kind of brings us back to the problem when we destroy trust, because there used to be, some of this going on. It's a super interesting question. And I think it's one we all have to sort of ask ourselves and challenge ourselves to, ponder what that's going to be. But it is huge changes. And it's, by the way, echoed by others that I know that are not even working in AI. I mean, that's the thing. Much like you, they're just starting to play with these tools, and it's sort of mind blowing, Let's hope there's some space for authenticity. I always say that to people when I screw up. I'm like, listen, I'm not an AI bot. This is how because mistakes are happening in real time. But
yeah, it is really mind blowing. And I remember reading The Singularity is Near. I guess it would be almost 20 years ago now. Reading the first chapter and putting it down and going, whoa. And if you reread it today, it's not nearly as far-fetched or implausible as it sounded back then.
I know. How do the sci-fi guys always have it right, and gals? Like, how do we just make it into their vision, or how do they know? Are they from
it's all DARPA, Maggie.
Yeah, it's exactly. God, I've visited a few DARPA places. But anyway, Doomberg, but we just scratched the surface, but it's so fun to catch up with you. I'm so looking forward to having some time to spend with you IRL, no AI bots, in real life in Nashville. It's going to be super fun.
I'll be in a blue shirt, Maggie.
By the way, everyone's like, I just think it's so funny. Everyone's like, is Doomberg going to be in his chicken outfit? I'm like, no, he's not. No, he's not.
People, it's a brand.
It's a brand, people. Yes. He will be sans the chicken, but you won't see because it's sort of Chatham House.
Yeah.
But I'm gonna try to do some stuff from down there, not with you on camera, Doomberg, but the Market House is gonna try to pump some stuff out while we're down there. But I hope you guys can join us. There's a lot to talk about. Again, we'll put a link for tickets if you haven't bought one already, and hopefully it'll be a little warmer, Doomberg, when we're down there.
Yeah, let's take the over on that. For my natural gas bet. I hope you're right.
That's right. That's right. Thanks everybody for tuning in and joining us. We appreciate it. We will be back on Wednesday, and both of us, of course, will be on Substack. If you are not subscribers, we hope you will do so. Hit that button, and we'll see you again soon. And Doom, I'll see you next month.
Yes, looking forward to it, Maggie.
All right. Thanks everybody. Take care and good luck out there.